On the EA exam, a lot of points come from one basic question: is this worker an employee or not? If it's an employee, you're in W-2 land, with payroll withholding and year-end wage reporting. If it's an independent contractor providing services, you're usually looking at Form 1099 NEC. Don't overthink it. W-2 is wages. 1099 NEC is non-employee compensation for services. Now split 1099 reporting into two buckets. Form 1099 NEC is the big one for services you pay to non-employees, like your web designer or painter for your office. Form 1099 MISC is for specific categories: rents, prizes and awards, certain medical payments, and royalties over $10. Also, gross proceeds paid to an attorney's office can land on 1099 MICs. The exam loves mixing these up. Deadlines are easy test points. W-2s to employees and the Social Security Administration are due by January 31st. 1099 NEC to recipients is also due January 31st. So if you see non-employee compensation, your brain should jump to 1099 NEC and January 31st. If they ask file with SSA, that's W-2, also January 31st. Next, the classic exceptions. First, 1099s are generally for payments made in a trade or business. Personal payments aren't reportable. Second, payments to corporations are generally exempt from 1099 reporting. There are exceptions, especially around attorneys, but the exam usually wants you to remember the general rule. Corporation equals usually number 1099. Here's the trap that gets people: how the payment was made. If you pay by credit card or through a third-party network like PayPal, Stripe, Uber, or Lyft, you usually do not issue a 1099 NEC or 1099 MISC for that payment. Instead, the payment settlement entity reports it on Form 1099K. So for 1099 NEC and 1099 MISC, think cash, check, or ACH, direct payments. Form 1099K has its own threshold rules, and those can change, but the exam angle is usually conceptual: who reports it and why. For 2025 and later, the threshold is back to the old standard: $20,000 and 200 transactions. If a question says the payments were processed through a network, your first instinct should be 1099K, not 1099 NEC. Now cash compliance. Form 8300. If a trade or business receives more than $10,000 in cash in one transaction or related transactions, it must file Form 8300 within 15 days. And there's a second requirement. You must give a written statement to the customer named on the Form 8300 by January 31st of the following year. On the EA exam, they love testing both deadlines. Finally, define cash for Form 8300. It's not just paper bills. It includes US and foreign currency, and certain monetary instruments like cashier's checks, bank drafts, and traveler's checks. But it does not include wire transfers, credit cards, ACH, or personal checks. That definition is why some transactions that look partly non-cash still trigger Form 8300. Ethan is the sole member of Harbor Bullion, LLC, and he's a professional dealer of collectible coins and precious metals. A customer buys 15 gold coins for $13,200. The customer pays $6,200 in cash, and the rest with a cashier's check for $7,000. What reporting obligation does Ethan have for this transaction? Think about it. The best answer is that Ethan must file Form 8300 within 15 days after receiving the cash. He's in a trade or business, and the transaction involves more than $10,000 treated as cash. The tempting wrong answer is just report it on Schedule C, but Schedule C reporting doesn't replace the separate Form 8300 cash reporting requirement. What is the deadline to file Form 5500, the annual return and report of an employee benefit plan? The options include different versions of the 7th month after the plan year ends. Which one is correct? Think about it. The correct deadline is the last day of the 7th month after the end of the plan year. For a calendar year plan, that's July 31st. A tempting wrong choice is the 15th day of the 7th month, because many returns use a 15th day pattern, but Form 5500 is generally due on the last day of that 7th month.